Hey Golden Bugs, welcome back. So Sive Morten is here with ForexPeaceArmy.com, and as usual on the weekend we're taking a look at the gold market, trying to create a trading plan for the coming week, and also just briefly talk about the weekly report that we have prepared this time. So as usual, we have taken a look at the news, at some statements, forecasts on the gold market, but really big part of the report we have paid to very important questions, as I see, that not only on social media as an X platform, as people start asking whether the gold is overhyped, whether we start selling, what to expect nearest time. So even our forum members also concerned with that. Because if you have the long position, especially in physical gold, you do not want to miss important points, and you would like to fix some book result. And it's a reasonable question. So we have with our forum member Peter some talks about this. And if we have provided answer in general, so we have even specified some tools that we could intend to follow to not miss actually the opportunity of selling gold, or actually to identify the important points for possible reversal and so on. In report, we have paid more attention to that, dealing with some numbers and deep in some more details, providing you a few questions that you could answer that let you to understand in what way you would like to close the position, what way you would like to actually book the result, whether you would like to do this at all or not. So if you're interested with that and you're also concerned with this question, definitely you will find something interesting in this subject. Also, we have provided a few ways to estimate some kind of the fair price of the gold. Of course, it's not some absolute fair price, but we have taken a look in terms of the money supply that is not backed by the gross domestic product and the global domestic product. We have taken a look in perspective of the gold value in terms of the real rates and inflationary expectations. So some other ways of the calculation of the fair gold price. So and mostly all of them point that indeed in the current moment gold is tactically overbought. This is not a surprising moment. So the question is, of course we have to react on this situation, we have to book results, especially when the market is overhyped. But the question currently is in the way how you would like to do this and how it's more comfortable mentally, particularly to you, how to do this. We have provided you a few options for that. From our side, of course, in the day-by-day videos, we will try to catch the clear signs of the possible deeper reaction on the gold market, deeper retracement. We will try to not miss them. And obviously we will inform you with the things that we see and warn you that indeed if some big retracement is coming, it's better to out if you're not out at the current moment. But our conclusion is absolutely definite. We have to react on the major targets that we have, and 41 is a major target. Actually 4050 is almost the same. So we have to react on it, and we definitely have to book results in these points. So when you follow our questionnaire on the report, you also probably will come to the same conclusion. That's what about the long-term view. Now let's try to invent something more definite and what we intend to do on gold in the coming week. First of all, if you take a look at the daily chart, you could see that on a daily chart, market is not quite at overbought, although it's overbought on everywhere, on the weekly chart, on a monthly chart, and on a yearly chart. So what does it mean? It means that if somehow market will ignore this bearish engulfing pattern, and theoretically it is possible because Donald Trump has surprised markets with their statement on the Chinese tariffs when the market already mostly has come to the closing. I will not be surprised if we will see some really aggressive performance on Monday on the gold market. In this case, if this pattern will be ignored, first we will get definitely return back to the top, which is around 40.55 area, 40.60. But potentially with some upward continuation, market could try to reach the overbought around 41.17 area. In fact, if market will keep to this level, it means that our all-time XOP target on the monthly chart will be done. Because then you understand, even now we could say that's mostly done, because as you understand, the $50 difference, it's nothing for a yearly chart, and a $3 difference, even more nothing. So that's probably somewhere will be the point. Second moment that we could keep an eye on the daily chart is watching for bullish grabbers. For instance, if market remains frozen for 1-2 sessions, start floating around, take a look. Getting the grabbers will also mean that we could get taken out of the top, and supposedly maybe we'll reach this level as well. So that's 2 points to watch here. But this is mostly actually background for reasons for monitoring market, because on the daily chart we don't have clear signals except the engulfing pattern. So from that standpoint of view, on the intraday charts everything will be decided. So first, on the fall diaphragm chart, here I do not see something really special, because the trade that we have taken here around 39.60 support is mostly done. As you will see on the hourly chart, minimum target of this upper direction completed. But now the major question, what will happen next, right? So here is the picture that we have prepared on Friday. But at that point, we were somewhere on this level, right? So we talked about the OP target, if you remember, that it stands too close. That's why we're mostly watching for XOP, which is 40.27. At the same time, by the Chad-Napoli framework, its minimum target 40.15, 618 resistance for our brand by the trade on the fall diaphragm chart. You could see that Chad-Napoli has become right again. So that's why I said on the fall diaphragm chart that this momentum trade mostly is done, because market has reached minimum target. Correspondingly, here it's a very comfortable point to make a decision. Why? Although it doesn't increase the chance on the success, but market stands at the point where it has to keep going lower, or bearish scenario based on this engulfing pattern will be failed. Why? Because market already stands at 618 resistance. There's no many more resistance levels above, and it has no other options rather than to turn down to complete the target of the engulfing pattern. Correspondingly, this is the point for short position taken with the minimum possible risk. So you will not get any better entry point for a short trade. Whether you would like to go short or not, this is a different question. But if you would like to, that's the point. That's the first moment. Second moment, for the bulls, it's also important. Why? Because if market somehow will start moving above the XOP, coming close to the 40-30, moving above it, erasing the 618 level, erasing the XOP, returning back to the top, that will be obvious sign that we will not get any ABCD retracement, that the engulfing pattern is failing, and more probable that we will get on top either straightforward upper continuation, or, which is better to us, possible reverse head and shoulders on top with some retracement and ability to take position for the further extension to the upside. That's into what's the plan, what we would like to do. Currently, guys, unfortunately, based on this performance, I even have taken a look at the 5-minute chart, on the 15-minute chart. I do not see clear signs that could give the lots of confidence that definitely this leg will happen. The only thing that you rely on is possible retracement, resistance area, and advantage that here you will have to, and you could place very tight stops. So you could place it just above the XOP, it will be enough. So market has to start down direction right from here. If it will not happen, in fact, by the nature of this performance, the nature of the engulfing pattern with this retracement, normal bearish market has no reasons to move above the XOP. It has reasons to complete it, but to move significantly above it, it will be already the bullish sign. So that's the advantage. So that choice is up to you. Whether you would like to wait for these patterns on Monday, or you still will decide to take position, you will have to decide by yourself. In general, I already explained everything that I see currently. So as a bottom line for the bears, this is ultimate point. You make the decision here. For the bulls, you should do nothing, just wait. If we will get deeper retracement, well, then we will have to wait more and for something else. But if we will see the upside breakout of 40-30 area, this will be the chance, and we should be prepared for entry on some retracement, because in this case, as I said, engulfing pattern will be erased, and market probably will try and make an attempt to move slightly higher. That, in towards what we have from the gold market right now. See you next time.